Good evening, everyone. We've convened here to talk about the budget, but the big hot topic right now in the market is the rally that we've seen in precious metals. Gold, yes, has always known to be a safe haven asset, a safer asset, something that all portfolios should have, but the kind of run that we've seen in silver this year and the unimaginable rally, of course, was met with a 30% fall on an overnight basis just very recently. Amid this entire setup, let's now try and understand and decode whether this dip is going to be a dip worth buying. Should you be waiting more? Is this a market where timing the market is going to be better than time in the market? So lots to talk about. Let's start by talking about what the generic outlook is on silver, and give us a sense of how first should one be reading into the kind of volatility that we've seen in the precious metal space, and particularly in silver. It's something that we've rarely seen in the past, and the two times in history that this has happened, it has not sustained. Do you think this rally, despite the current speed breaker that we're seeing, could continue going ahead? Sure. I think so.
Silver, it has made the headlines. No.
Mike seems to
I think it's on, right? Okay, fantastic. Silver, yes, it has made a lot of headlines thanks to its volatility, but we need to step back. This is a good time to step back because the FOMO crowd is out. Since last 2 years, when we have been advocating gold and silver, our theme was very simple: de-dollarization, and linked to that, deglobalization. This is the only reason why somebody should invest in a bullion, gold, and its sister, silver. Now, silver is a combination of monetary metal as well as an industrial metal. Currently, 60% of its demand comes from the industrial side, and it's just not an industrial metal like any other industrial metal like steel or anything. It is critical, from your smartphones to your solar panels to your Brahmos to everything. So that's the reason why globally all governments are now regarding silver as a critical mineral. And we just had a big alliance in US, in Washington, a couple of days back. So it is structurally in a bull run. But what happened was actually very interesting. Till I would say August of last year, on a year-on-year basis, silver had clocked a return of around 50 odd percent. From August onwards, it went vertical. And especially from November onwards, just within 2 months, it clocked a 3x return. 3x. Even a Bitcoin doesn't do that, right? So what really happened was that from October, a lot of these FOMO crowds with a lot of leverage money who got stuck in crypto, and then the AI stocks were flatlining, they rotated heavily from December on into silver because it was the hottest thing. So they went in, all guns blazing. It was like an all-in, all-out. So that's what we saw. So the number of $120 per ounce, right? So if we ignore that noise, silver has been steadily going up. So the structural story is intact, and this is the time for the investor to get in, accumulate through ETFs or through the physical means, and sit tight and sit quietly for the next 2 years.
Okay, so that's the very near-term outlook on silver, but a very interesting word you used was FOMO, and I want to build upon that. Talk to us about the outlook on where prices are going and what one should do, given that this is a dip we've seen and FOMO in the market is quite high. For people who've missed out on the silver rally, would now be a good time to enter, and for those who already hold, would now be a good time to add and average out the portfolio?
Thank you very much, Sneh, and thank you, ET Now, for inviting me on this show. I would say that what Anand just said is absolutely right. We had a lot of FOMO developing. I think that's been burst now. That's been burst for a simple reason: the way the markets have behaved behaved in last 2 or 3 days. I would say on the 29th of January, the silver prices were hovering at around the all-time highs of around $121. In Indian markets, we saw the prices going to an extent of around 4,20,000 per kg. And in just 2 days' time, the markets are back to the normal to an extent of around $225, 225 lakhs for a kg, and approximately $73 levels in the international markets. The question is pretty much right, whether we should get into the market as this particular moment stands or not. I would always say that both gold and silver, and as Anand rightly pointed out, silver performs both bullion and the industrial metal function. 60%, or to be precise, 56% of the metal now is consumed for industrial purposes. And the new technologies like AI semiconductors, the structural deficit, the demand coming in from the EV, all those things definitely look positive going forward. There is a structural deficit. We saw 226 million ounces of structural supply crunch in the year 2022 calendar year, and that is continuing. 5 years, the last 5 calendar years have been the deficit situation for silver, and the demand is going up like anything, be it electricity, the EV, be it the semiconductors, be it the energy resources for driving the AI servers, and anyway, the normal industrial demand. So I think the outlook remains positive. We should go in for a staggered way of investment. And I would say both gold and silver, not just the silver, both gold and silver, now since you have ETFs in silver too, should form a part of a corpus or a portfolio of any individual who wants to part this particular money in the financial markets. So I would say that a staggered way of investing would be the best thing to do through ETFs for a retail investor. As of this particular moment, there are a couple of ETFs, Nippon EP ETF, and the AUMs of the ETF have grown from around 10,000 crores to approximately 70,000 crores on silver ETF over the last few months. So I would say that the staggered way of building up the portfolio with silver, and around 4 to 5% of the total, I would say, the corpus should be invested at all times in silver, and around 10 to 12% of the corpus in gold at all the times.
Okay, Mr. Mathur, thanks for that take. And you've listed out a lot of use cases for silver. So like we understand, silver is such a diverse metal and is used in a lot of places. My question to you, sir, now is, let's talk about the supply of silver, because the demand-supply mismatch could create the kind of price hike that we've seen. Now, all the way back in 1980 and also in 2011, when we saw such sharp rallies coming in, we had cuts that followed soon after. But this is a rally that looks like it's here to stay. Given that there are so many use cases for silver now with EVs, with electrification, with semiconductors now being a theme that was not something back in 2011, do you believe fundamentally we should not be giving a lot of, or not be paying a lot of attention to this sharp fall that we've seen, and keep in mind the broader picture? Would that be the correct way to now start approaching silver investments for people who've missed out?
First of all, thank you for inviting me on ET Now. See, we are surrounded by silver. Whether you say EVs, or you say computers, or you say mobile phones, or switches, the demand for silver will continue to rise in the coming future. We saw a sharp up move. That was like, as he already said, like there was a FOMO. Like, a lot of people started investing, oh, we are going to miss this rally. So we saw a sudden rise in the prices. There was a good rise before because of the industrial demand. We were seeing a deficit in the market. Later on, it started correcting. That's because the margins have increased across the major exchanges, and it started correcting. Your question is this a right time to invest? I think so. It is better to be cautious right now. Wait for some time. Let this chaos settle down. See, the silver is termed as a gold with steroid, which actually we saw which has happened. So I think so, wait for some time, let it correct a bit, let it stabilize, the volatility to stabilize. then one can invest in a smaller manner, put money like in a bit-to-bit basis, not in the lump sum amount, and keep on investing for a long-term perspective because it has a brighter, future, you can say, because the silver has got a good. It's not easy to replace silver, frankly.
Okay, so that's the take. Mr. Banerjee, want your view on gold. Let's pivot the conversation away from silver for a bit, talk about gold. Now, very interestingly, some of the richest Indians right now are the Indian housewives. Given the amount of gold that they've got stashed away in their cupboards or in their lockers, most of it is not in an ETF investment form or gold bonds, or there are so many other ways that one could be looking at a gold investment. Given that there has been a moderation here to and a significant pullback in prices, what according to you would be a good way to start dipping your toes once again into the gold market, and if at all now is a good time to do that?
Right. See, whenever the gold prices have fallen by 20% or plus, that is the time for the investors to get in. And see, here the issue happens is that we have to moderate our expectations. This whole FOMO rally, all that has done has creating an anchoring bias. That is 5,600 for gold. Actually, gold has not corrected much. For silver, $121. Just imagine you went on a holiday for 3 months and you are back. Just invest like that. Nothing has changed. So gold, as I said, I started by saying de-dollarization and de-globalization. I'll just mention a bit because without explaining de-dollarization, there is no thesis for doing long-term investment for gold. See, de-dollarization is a process which began in 2008. Now it is achieving escape velocity, whereby in a few years' time, dollar will become a normal currency. Yeah, it might come as a shock to all of you, but if you connect all the dots, all the things that are happening, the fracturing of the world order, as Mark Carney said in Davos, we are not transforming, it is fracturing, right? So basically, the same thing happened with pound 90, 100 years back. Every 80 to 100 years, the business model of the world has to be changed. Like, take any industry. Whenever you face a challenge with the existing business model, you don't just shut operation. You always move to a new model. It takes time, but it happens. So it's 18 years running in I think the way the central banks have accumulated the gold, they have in there as a store of value, as far as the dollar is concerned, they have more or less de-dollarized it because now the gold share of their FX reserve is now is more than the US treasuries. Now what is left is the unit of, actually the medium of transaction. And the rails are getting placed, be it connecting the electronic payment networks, be it RBI talking about connecting the CBDCs and doing these bilateral deals. Once you just connect all those dots, it won't take much time for the countries to switch to trading in bilateral currencies, just like Thanos, one snap, and the entire global trade can shift in a very short time. So gold sits right at that point, and gold has, in fact, beaten the financial assets over a very long period of time, 20 years, 30 years. If we compare any index in the world, even S&P, gold has outperformed. It just shows the amount of currency debasement which has happened, which has basically inflated all assets, created an illusion of wealth. Right? So gold should be a part of one's portfolio, and Indian women are the smartest in the world, which even Mr. Uday Kotak said some time back. So yes, this is an opportunity to buy gold, but not with leverage. Actually, one should control greed and buy in ETF or in metal form.
Okay, so that's the outlook on how you can start adding to your gold portfolio or a fresh investment if this is something that you don't already have. Mr. Mathur talked to us about the governor's speech just this morning. Precious metals is something that he mentioned multiple times in his speech today, something that we've never in the recent past at least seen in any of the governor's speeches. And he also went to the extent of saying that the inflation target has been hiked. Given the kind of run-up that these precious metals have seen, by 60 to 70 bips, the inflation could go higher, is something he said. At a time like this, would it still be safe enough to call these assets safe haven assets, given that our outlook is being hiked on the back of this?
I would differentiate between gold and silver
Sure.
in that regard. The silver is a very dynamic commodity. It works both as an industrial metal, as I said earlier, and it as a bullion too. So I will not keep silver as a safe haven kind of commodity, but gold definitely is a safe haven without doubt. Um, to the recent memories of 2008, 2009, I'm not talking about 1979 when the inflation, the US touched double digits of around 23% or so. So whatever we have seen over the last couple of days is those 40 years, the one day falls on the 1st and the 2nd of February, just few days back. I would say gold is still a better one to be parting with as a portfolio, as a real safe haven asset. Now, even if the silver is down today, the gold is coming to the senses to a level where now it is trying to pull back on the rally. We did saw the prices touched all-time high of around $5,600 per troy ounce in the US markets, and Indian markets we did touch. On the futures, the April futures touched around 1,91,000 per 10 grams, and the neo month February at that time touched an high of around 180,000 per 10 grams. So I would say that the gold is definitely an asset as a safe haven asset. We have seen it in 2008, 2009. We did saw it coming in Eurozone crisis in 2010, and then again the COVID time. So 25, the calendar year, we did had 83 highs between 24 and 25. So 2 years, 83 high, once in a week, every time the gold has touched an all-time high. So I would say that the senses are prevailing now. The dollar weakness, which was giving a bounce on the gold prices, is somehow now not catching up. The dollar is appreciating. So it did touch a low of around 95.55 few days back, and currently we are seeing dollar in the range of around 97, the dollar index. And I would say that the dollar, the geopolitics, the economics, everything, including the Venezuela, the Iran, everything, including the inflationary part, and the precious metal talk is definitely on the hit list because of the returns and the fall which we have seen over the last couple of months. So I would say gold would be better as a safe haven asset because it works really well and it reduces your risk adjusted returns to a large extent. So even the CME study some time back has showcased that if you have gold around 12 to 15% in your portfolio, your risk-adjusted returns are much, much better than only having just the risk assets which are equity or bonds as fixed income. So I would say around 40 to 50% should be on the equity side, 35% should be on the fixed income bond side, and 10 to 15% in times of these sorts, which helps to minimize your losses on the risk assets. So gold would be the best thing to have as a safe haven. Thank
Very
you.
interesting take and very interesting number of highs that gold reached also. Yes, we saw it a lot of times, but thank you for putting a number to that. So weigh in with your view over here. A lot of times when we talk about precious metals, earlier it was gold, then you had silver that's made it a part of that list because of the kind of rally we've seen. One metal we've not spoken about, despite it seeing an 85% surge in the last 1 year, is platinum. Nobody is talking about the kind of move that we've seen in platinum. And there are not a lot of ways to invest in an asset like that. How does one participate in a rally like this? Would it still be a rational part of the portfolio? Would it be a good investment to make along with something like, say, a gold and a silver mix in the portfolio?
Yeah. It is better to have gold and silver, but I would say maximum amount should be in gold. See, the reason behind is if you are looking for a hedge against any uncertainty, thanks to Donald Trump, we have uncertainty every day. We wake up in the morning, oh, there's an attack or something's happening, like, you know. So there is a lot of geopolitical tension happening in the world right now, whether it is Iran, Venezuela, you take Middle East is in crisis. Trade wars are going on still. So the gold is a friend for, like, you know, it's going to protect us from uncertainty. So during such kind of time, gold is a better option. Second thing, as Anand has already spoken, like, the central banks are continuously buying the gold, and they have continuously buying almost 1,000 tons of gold since 2022. But maybe this year they have, the pace of the buying has reduced by around 867, if I'm not wrong. But still, they are much above the average compared to 2001 to 2010. And seems like they're going to continue because everybody is scared. Like maybe the Donald Trump may like put sanctions. So what are they going to do with the dollars, like, And even if we see it, the gold has become the second largest reserve right now. So overall, fundamentally, structurally, the gold looks very positive in the long-term perspective, and one should have gold in their portfolio. Like as Naveen sir has already said, like 10 to 15% is a good an option to have gold. So yeah, both gold and silver is a good option, but silver may have like a risk of uncertainty because it is a industrial metal. So if the economy is not doing well and the demand for electronics or the EVs or the PVs goes down, so there's some impact which would we see on the silver, not on the gold. So yes, you can have both, but more towards gold.
Okay. Mr. Banerjee, want to talk to you about what lies ahead. Two factors that drove the rally we saw in precious metals was one, the tariff uncertainty. Now there is certainty about our trade deal with the US. Also with that, a lot of other countries have already inked their trade deals with the US. Second was the uncertainty of who is going to be the next Fed chair. We now have clarity on that too. And third, in fact, was the central bank buying action that you've said. We've seen a lot of central banks globally, especially China, lapping up as much of the precious metals as they could. Now with all these three factors behind us, how much of an impact or an influence rather are these going to have on prices going ahead? And let's say in the near to medium term, where are prices for gold and silver headed?
Yeah. See, if you look at the gold demand, I would split it into three pillars. First is consumption, the jewelry which we wear. So let's ignore that for a moment because that is price sensitive. What has been driving the gold price are two factors, the diversification pillar and the speculative pillar. We have seen the impact of the speculative pillar, we talked about it. Now, there are two kinds of players in the diversification pillar. Central banks, they are trying to diversify or swap their dollars into gold. See, gold is just the currency. Just imagine a monetary hierarchy. Gold is the founder, and the dollar is the CEO, right? So when you have to change the CEO, you have to go to the founder. It's kind of that to understand it. So they have been swapping it, is what you are saying, 800 tons, 1,000 tons. But the Chinese central bank has been acquiring gold through unofficial channels, right? So in fact, I think a couple of Western brokers had come out with a report on that, and that's substantial. Now, what is going to be the driver going forward are two. One are the private institutions. If you look at the allocation to gold from the Western financial institutions, the citizens, it's pretty low. They are loaded in financial assets and in cryptos. And that money will move because the Asian individuals, Asian central banks, Asian institutions are heavily invested in gold, and we are seeing the positive impact of that. But with time, we will see a lot of money of Western citizens rotate to gold as they realize that the path forward for America is only currency debasement, because they face an economy which is clearly a K-shaped economy where top 10% is doing fine, the rest 90% is actually sinking. So, and Trump faces an election risk in November, and he has made it amply clear he is going to print money, both from the fiscal as well as from the monetary means. So the path is clear that these will continue to drive gold prices, but from time to time we will get the speculative push, and then we will see a sudden jump in the gold prices. But the overall trend is up. We won't be surprised to see gold at $6,000 in 2026 or even above that.
Okay, so we have less than a minute left. Very quick rapid fire style. The whole crux of this conversation was buy the dip or wait. If you had to give a one-word answer, Mr. Mathur, what would it be?
Yeah, Sneh, I would say that buy on dips in a staggered way. But just to add a little number,
Sure.
I know we have 30 seconds only on this. The global ETF buying would be very strong this year too. So in 2025, the global ETF buying was approximately at around $559 billion. I'm talking about the AUM. So that's what 2025 we ended with. And 2021, and I'm talking about 2021 number, that was $110 billion. And 2025, when we started off with the year, it was $306 billion. So the ETF buying, as Saif said, the central bank buying would be very, very strong for gold particularly, and therefore between the two, gold and silver, as I said earlier, gold would be a very, very good bet to be part of the portfolio. Thank you very much.
Mr. Mukaddam, one word answer, buy on dips or wait?
Definitely buy on dips.
Buy right now or wait?
I think so. You should wait for chaos to settle right now. There's too much of noise.
Okay.
So let it settle. Then you can continue buy on dips and continue buying in short, in staggered way, not in the lump sum amount.
Okay, Mr. Banerjee, buy now or wait?
Buy now and buy more if it dips.
Okay, with that, we'll wrap up this panel on what to do when it comes to precious commodities and precious metals. Hope everyone sitting here has got their answer. Gentlemen, thank you so much for your time, and thanks so much for joining us. Thank you.
Thank you so much, gentlemen.